Alrighty, everyone. First and foremost, I want to say thank you all for coming out. I'm extremely excited to start this roundtable discussion because I think it's one of the most fascinating ones that we have to ask in regards to crypto markets over the next few years. So the panel title is Investments, Will Altcoins Dominate? And today we have a lot of wonderful guests here that I've personally gotten to meet so far. But before we dive into the discussion, I guess we'll go around and just kind of introduce ourselves. Just to start, my name is Nicholas Merton. I run a YouTube channel called Data Dash. I started it back in July of 2017, and I have about 6 to 7 years of investment and trading experience in traditional markets. And I was able to translate that into crypto markets over the past few months, and I've been able to use a mix of technical analysis as well as fundamental analysis, which I think is very key and important in regards to what we're going to be talking about today, because altcoins have become more and more of a face in regards to the crypto market comparative to just Bitcoin. So it's going to be a really interesting discussion. I'm glad to be here today. And yeah, I'll go ahead and go down the line here.
My name is Dan Wolfe. I run a cryptocurrency fund called Simoleon Long-Term Value, and I am also the CEO and co-founder of a company called Trading Gene, which is going to try to Uberize the trading algorithm market to allow any investor to access any creator's algorithms on our marketplace.
Hello, everyone. My name is Tone Vase. I have about 15 years of trading experience. I do come from traditional Wall Street, where I used to help build risk analysis models. Companies like JP Morgan, Bear Stearns didn't work out very well for Bear Stearns. Joined the crypto space around 2013. I've been a content creator. I have a pretty popular YouTube channel, and my Twitter is where I do most of my work. And I mostly talk about trading, but my expertise is in explaining the economics of the blockchain and Bitcoin and where this is all going.
Hi, I'm Kenrick. I'm with Golden Gate Ventures. We're a more traditional VC focused on Southeast Asia, a couple of funds. Got more involved in the whole ICO space over a year ago when one of our companies, Omise, did their ICO. We're currently looking to set up our own dedicated fund purely investing in tokens. Yeah.
Hello, I'm Raphael from IG Investment Bank, originally based in Berlin. And I'm the managing director for Southeast Asia. So we just opened last year. And we're specialized in technology, M&A transactions, and we're having a lot of new ICO projects. And most importantly, we're building indices for all the altcoin as I'm speaking now.
All right, awesome. So we'll jump into the questions in just a minute here. We have a lot of interesting ones for the panel, but I think we all kind of agreed that it would be important to go ahead and kind of talk a little bit about the title of the panel, because the term altcoin is something of question to a lot of people when they get into the crypto space. I think everyone has varying definitions of it, and because we have a panel of really awesome people here today, I think it'd be good if we all just kind of go through and explain what our definition of an altcoin is. So generally speaking, and at least in my opinion, I pick up the term altcoin as alternative coin, meaning pretty much in general anything opposite of Bitcoin. So for quite some time, it seemed like in the cryptocurrency space, you had one player and one leader that really mattered, and that was Bitcoin. And most of the other cryptocurrencies in the space were usually forks or rip off of the source code in regards to Bitcoin. So what I've been able to gain so far is that we've obviously seen more altcoins come to the space. This is mostly due to people making variations of the Bitcoin source code, implementing different coins with different proofing systems, and then also in the space of ICOs, continuing to raise millions of dollars of capital and bringing up all these different ideas in regards to utilizing blockchain technology. So because of this, altcoins have become a bigger topic. I think in general definition, it's anything outside of Bitcoin. But I know that there are different branches of altcoins. There's utility tokens. There's just generally tokens itself. And a lot of people would be curious as to whether or not a token, which is separate from a cryptocurrency, is the same as an altcoin. I generally slide it into that category because it's anything outside of Bitcoin in the crypto space in my mind. And though that may be a little bit simplified, I'd love to hear what the other panelists have to think.
You want to start from that end then?
Yeah, I guess we'll just go down the line. Yeah.
You know, I would agree, but I think when we're talking about altcoins, we really are talking about the most liquid coins. I would separate ICOs into a separate category since it's a totally different, category of risk and analysis.
I pretty much agree. If it's not Bitcoin, it's an altcoin. But when that term came in, all it really was duplicates of Bitcoin. That iterated into platforms like Ethereum, and that iterated into copycats of Ethereum on top of Ethereum, basically for the ICO model. I would just like to very quickly read something Luke Dash Jr., one of the smartest core developers, wrote back in like early 2013 when he said, Litecoin and other scam coins like it are not doing anything new and are basically just copying Bitcoin. They made 3 insignificant changes. They changed the proof of work from SHA-256 to script. They made faster confirmation time, but it's totally irrelevant because those faster confirmation time have significantly less security, and they increased the coin supply, which again doesn't actually make anything new. So that was his explanation back then, long before any ICOs or anything else. And Litecoin is probably the best alternative to Bitcoin, and it's still so far behind the ball that nothing else really comes close.
Yeah, I think the way to think about it is like any market, like even like also in traditional like global markets or equity markets, you need some kind of reserve currency that any other pair trades against. That's what's the role that has Bitcoin. That's the role that has fulfilled for many years now. And as long as it remains usable as a currency, so it scales according to the increase in transactions. So that was a problem in December, obviously, to have a $40 transaction fee on Bitcoin. That makes it not a very good reserve currency. But if we assume that solutions like Lightning Network are going to solve that, I think there's no reason why Bitcoin wouldn't remain the reserve currency. It has to trade against, any coin has to trade against something. And since we probably cannot trade against USD Tether or any USD directly, there has to be some global reserve currency, and that should be Bitcoin if the transaction issues is solved.
So yeah, sure, I agree on the Bitcoin side, but I would say that as we were building our stack on indices before Christmas, at that time Bitcoin was around 75% of the global market cap. And I came back from vacation, it was just 30%. So then we just realized that some of the altcoin become important coins, so somewhere in the middle, that we had created something called T2, which was like just Bitcoin and Ethereum, and then Ripple was the number 2. So we said, okay, it's moving fast, actually. It's quite hard it's not like the Dow Jones, you know, when you're building indices. It's moving so fast. So I think it's really hard right now to give any clear guidance on altcoin. And as we're speaking, there's many new coins coming, and people are learning from what has been done, from the mistakes, better technology, new infrastructure tech coming. So yeah, I think there's going to be even better altcoin coming soon.
Yeah, I think it's very interesting when we're talking about the scale of altcoins. A few years ago, this wasn't really a topic of discussion. It was generally, like we were stating earlier, in regards to market valuation and projects being taken seriously. It was generally stuck around Bitcoin. But now we've seen a range of 2 things. What Tone was talking about earlier in regards to people forking off the currency, and this isn't like, for example, in regards to the Bitcoin Cash fork. This is things where people would take a lot of the original source code and would go out and make slight modifications, changing a block size, the algorithm behind the currency and its chain. And because of that, you get a lot of different reiterations with different concepts, different brands. And a lot of the times we find that generally around, I'd say well over 90% of these altcoins don't have any drastic change to it. So it leads to a lot of question of whether or not these altcoins can sustain the valuations they have. In my mind, I think the mass majority are worthless, and I think most people in this space would say the same, even though they probably have a lot invested in different names. And then not to mention as well, you have the other combination as well. You have venture capital pooling into the space. More venture capital is going into ICOs than early stage VC funding for startups. So because of this, you're having a lot of ideas on the blockchain or other forms of decentralization, and that's leading towards an excessive pool of liquidity entering into a market where the mass majority of ideas are most likely going to fail. So when you walk around, when you see different ICO projects, you see people raising tens of millions of dollars that probably aren't going to be able to sustain themselves for more than a year or 2. So that's my general point on it. But
Can I just comment on something real quick? So the difference between Bitcoin and any other token, ICO, altcoin, whatever you like to call it, there's one big difference. Bitcoin doesn't have a leader. It never actually had a leader. Satoshi Nakamoto was anonymous. The reason Satoshi was anonymous is because he knew his life would be in danger either from the authorities or from, bad people. That's why he remained anonymous for both of those reasons combined. Bitcoin grew organically. The movement moved because Bitcoin actually solved the problem. Everything else, ever since Bitcoin, it has a leader, it has a quasi-CEO, it has a quasi-team, it has a way where they print their own money for themselves in order to promote their own coin, and their incentive is to destroy Bitcoin to sell their coin. That's why there's this giant misunderstanding that the Bitcoin is too expensive, Bitcoin is too slow. This is all completely untrue. And the only reason why you're hearing everything from everybody about it is because everyone else is trying to sell you their coin so they can get rich. That's what Bitcoin doesn't have, and that's what makes it different.
Real quick, on Tone's point there, I think it's important. A good example of this in regards to the whole kind of centralized point of failure. When we talk about cryptocurrencies, the beauty of it, as well as the general core technology, blockchain, is that it's an offer to decentralize not only peer-to-peer payment solutions, but entire industries. And one of the issues that we find with even the second largest cryptocurrency, Ethereum, which claims to be decentralized, is we take a step back to a hack in the past, what's known as the DAO hack, where a lot of individuals had lost their funds in what's known as a decentralized autonomous organization. And because of this, what happened was instead of allowing that failure to linger on, they went after what seems morally right, which is to do what's known as rolling back the chain, so rolling back the transactions. Now, on paper, that sounds great. I think we would all want that in a sense. However, there's an issue with that. That means that there was a centralized point of control. Less than 1% of the Ethereum community was able to make a decision to roll back millions of dollars worth of transactions. And because of that, just like Tone said, there's that centralized point of failure. And again, it might sound good on paper, it might sound good to have that system of governance, and maybe some blockchains need that. But in the sense of Bitcoin, it is truly decentralized. The only decision-making process that comes with Bitcoin is done by the mining pool, the people who contribute hundreds of millions of dollars worth of computational power, as well as electricity, towards securing the network and transactions.
Just want to comment real quick to add, it's a lot worse than that with Ethereum. There is probably about 85 million Ethereum out there right now. It's just a rough estimate. But people have to realize that over 70 million of the 80-something million of the Ethereum was literally created out of thin air by the Ethereum Foundation. A big chunk of it literally went to pay the 8 co-founders and the majority and the other 100 people that started Ethereum. They basically printed an unregistered, unlicensed security for themselves, and I have a podcast explaining that with a securities lawyer, or they printed their own money. Either way, 90% of Ethereum was basically printed and sold as a pre-sale or held onto it by themselves. And that's what everyone else has been trying to replicate ever since because it was so financially successful for them.
Yeah, I guess there is this whole philosophical conversation that goes on, and some people have an almost religious attachment to some of the elements. I'm an investor, so I look at it a little bit differently. I think first thing I want to say is Bitcoin or any other coin, it's all lousy money, right? It's a terrible store of value. It's terrible for transactions. It's slow. It's expensive. It's unreliable. Nobody prices in Bitcoin or Ethereum or anything like that because
I do.
only Tony prices in.
Everything I do is priced in Bitcoin.
Okay, that may be, but you're not going to price your house or your milk in Bitcoin because it's changing all the time. So that's one of the things that I would say. When we talk about whether altcoins will dominate or not, I think it's very important to understand, as an investor, a few things. One is, the World Cup's coming up in Russia soon, and if you were to say to me, who's going to win the World Cup, Dan? And I would say, I think Germany's going to win the World Cup. And if you were to say, do you want to bet on Germany against all the other teams in the World Cup? I mean, some of those teams are lousy teams. You got Egypt and Saudi Arabia. They're not winning the World Cup. I'd still take all the rest of the teams against Germany, right? That would be a good bet. And as investors, we really need to understand two things that are very important. One is nobody takes away the old rules of investing. You should have a diversified portfolio. You should understand what is correlated inside of your portfolio, because there are a lot of Bitcoin forks. Are they correlated to the price of Bitcoin? That's an important question. Are the ERC20 tokens all going to be correlated one with another? Very important questions. And as an investor, there's one other thing to keep in mind that's very important, and my experience is mostly in emerging markets. Imagine two assets, whether they're coins or stocks, it doesn't matter, that increase by 100. Would you rather have the one that goes from 1 to 100, or the one that goes from 1 to 100 to 200? Obviously, both of those are great returns. But remember, the more mature currencies over time are going to provide you with a much less volatile return. But if you have a diversified portfolio and you have some exposure to some of these new entrants that will increase many times, maybe even 100 times, that's likely to give your portfolio a better chance of performing than others. So, I don't think the idea that you have to choose between Bitcoin and everything else, and if you make the wrong philosophical choice, that's a wrong choice. If you're an investor, do the thing that's going to be right for your portfolio.
I'll comment on that as well after.
So to follow on this, I think it's really interesting, and that's basically what we've been studying at IEG, is like, it's all about passive investments in the crypto and asset allocation. Your crypto asset allocation is to see what kind of basket you can buy, and a lot of funds are coming to the market, and we also need to understand, are those funds really performing against proper beta and smart beta we're going to build? And that's one answer we don't have right now. So that's what we want to do, and we want to have people being able to say, okay, I'm going to go into the crypto market, and I'm going to take the top 5, the top 20, or this kind of different indices strategy, and let's look how it's performing against some other funds. Some are hedge funds, so you can buy the volatility, or you can buy any kind of other strategy. But I completely agree that now it's also about the diversification on all the altcoin, and we saw that there's a lot of mechanism where it's related to the price. So really cheap altcoin, this is where you're going to make better return. So a lot of things are just like about trading right now.
If you talk about the currencies, like Bitcoin, it's very simple, right? It has a first mover advantage, it has a brand advantage, it has a philosophical advantage. As you said, it's completely like non-led by any individual person, although Satoshi has 1 million coins locked up, I believe. So that's absolutely true, but it has to address the usability of it. It's as simple as that. Like, if it addresses the usability, if we don't get $40 transaction fees again, if it solves like the mining issue over the long term in terms of energy needs, then of course Bitcoin will remain the leader. But you have to be practical. It has to be usable for a much larger audience than it is today. If we want wide-scale adoption, and we're still in the super early stages, and we want millions and millions of more people to use Bitcoin or any other altcoin, and at the current capacity, that's just not viable for Bitcoin only. So I very much hope it will scale, and then Bitcoin will remain the dominant player, but you have to be practical about the use case.
I agree. You have to be very practical about the use case. Bitcoin never promised anything to anyone. Bitcoin came out as a censorship-resistant value transfer. And when it comes to a censorship-resistant value transfer, there is no competition. The speed of transaction is irrelevant. The cost of the transaction is also irrelevant. If you have to buy something and the only method of payment you have is Bitcoin, the fee is completely irrelevant. And we have the smartest people in the world lowering that fee with second-layer solutions. The reason it has to be a second-layer solution is because this is just not scalable on-chain. The only reason why you see some kind of an altcoin being faster and cheaper is because nobody uses it. That's the only reason. And now that the mempool is not being spammed, Bitcoin is incredibly cheap to use. I'm getting transactions coming in right now at 10 to 15 cents of a fee. And that's not because less people started using Bitcoin. That's because Bitcoin was becoming less spammed now that Lightning Network is almost here. On the other front, it's like, no, I will bet on Bitcoin because that's the only one with any kind of competent developers. To me, programming the security of a blockchain is pretty much nuclear physics. Just like I wouldn't trust the Reddit community or some random CEO to build the nuclear reactor in my backyard, I wouldn't trust that to the nuclear engineers to do so. This is pretty much what Bitcoin is. I don't think of it as money, even though that's how I use it. I think of it as the internet itself. And all of these other altcoins, I see them as the .coms with a fancy website and no development behind it. And like I said, they're all centralized. They're not real protocols. I'm expecting Bitcoin to stick around, and the only companies that utilize the Bitcoin blockchain properly, those companies will survive. We don't have multiple internets today. We have just one. I'm expecting one blockchain in the future, the only proof-of-work blockchain that is useful for censorship resistance and immutable transactions.
Well, no, I think there's a lot of good points raised. I mean, we've jumped around to a lot of things here because altcoins are a pretty wide topic. I think the thing that we run into is what Tone was talking about in regards to scalability. This is something that has been one of the largest debates inside the cryptocurrency community, especially within the Bitcoin community, and has led towards a forking of the currency that's created Bitcoin Cash, Bitcoin Gold, Bitcoin Diamond, and countless other Bitcoin forks that I can't even think of. And some of these are worth tens of billions of dollars at their current traded prices. So this is a serious topic, and it's something that's very controversial in regards to scaling on-chain and in regards to increasing block size, where some people have a feeling that through Moore's law, meaning over time, storage for the blockchain ledger in regards to Bitcoin can get cheaper and become more sustainable for miners who run fully validated nodes on the network to store the copy of the ledger in there. Some people believe that that can happen. Some people don't. They believe in layer 2 solutions like Lightning Network, where they've recently launched mainnet, and a lot of people have started to open up payment channels and run nodes on the network. So again, it's a continued debate. It's been something that has led towards a lot of controversy in the community, which has disrupted a lot of the infrastructure in regards to Bitcoin. But Bitcoin is not alone in this fight. In regards to scalability, much of the other currencies in the space, in the altcoin space, that just aim to be peer-to-peer digital cash solutions like Bitcoin, or the enterprise protocol platforms like Ethereum, Neo, Icon, and the dozens of others that have started to come up, they might offer wonderful flexibility in regards to languages and development, but the issue still remains in a lot of cases, just like Ethereum, which is the second largest, that scalability still plagues it. I don't know for those of you out there who keep up with the space, but you might have heard about something called CryptoKitties. It was a fascinating time for the blockchain space because it really woke us up to the argument of scalability. Ethereum, which is aiming to be an enterprise platform for millions of applications through its development, got clogged up by people trading digital kitties. I would assume that every single enterprise company who's working in the Ethereum Foundation sat back a little bit and said, okay, we probably need to address scalability much faster. And that's where I think a lot of these applications are going to be blocked until we have scalable platforms. But there are some altcoins out there. There's some that risk what Tone is talking about, which is censorship resistance. They're more centralized. I think you see this in projects like Neo. And because of that, they can process faster transactions. But it's going to be the question as to whether or not a lot of these altcoins that can't scale or find that solution will become worth anything, because it's one of the big roadblocks. And unlike a company over time which can evolve, if these cryptocurrencies do not meet the standards, or their platforms do not meet the standards for corporate entities to build on these platforms, these multi-billion-dollar coins and tokens aren't going to be worth anything. They will eventually evaporate. So in regards to altcoins, I think in a summary, you're going to see well over 99% fail. But out of 1,500 that are already created, and that number has been picking up each and every year, you're going to see more successful projects over time. When markets dip down, you have the cypherpunks who were originally in the crypto movement, and they're going to stick around and they're going to continue to innovate. So I don't know if we'll have one blockchain, but I do believe that we'll have a few options that are peer-to-peer cash solutions. Whether or not Bitcoin becomes that with Lightning, I wish all the best to it. And then there will also be different things that don't use blockchains, such as Nano or Array blocks originally, which uses directed acyclic graphs like a block lattice, which I highly recommend people look into. And then you will have enterprise solutions, which have been the most successful ICOs over this past year, that can actually scale. So Ethereum's got a lot of competition, and I think that's something that people should keep for in the altcoin space. So peer-to-peer digital cash, very interesting. And then enterprise protocols where people can develop decentralized applications as well as executing smart contracts.
Yeah, I would say that there are a couple other things that I would anticipate. I'm almost certain in the next few years we'll see the emergence of some sovereign cryptocurrencies, whether that's crypto yuan or ruble or Lakshmi in India. And you know, yes, they are philosophically at odds with the cyberpunks and the origins of the Bitcoin blockchain, but that doesn't mean that they won't have a place in the currency. I mean, I think the internet experience is quite instructive, right? The internet is and was incredibly transformative, as will be blockchain. But if you were to go back to 1983 and look at the top companies, you know, you would not see very many of them. You know, many of the FANG, the biggest stocks in the, and most rewarding for investors in the internet, they emerged after the dot-com crash, right? Some of them emerged before and some of them after. So, you know, I think there's you know, I always worry about getting too attached to where we are right now. You know, yes, I think there'll be 5 or 6 in 5 or 10 years altcoins that dominate the market in capitalization. Yes, I think it's possible that Bitcoin will be one of them, but I think it's also possible that it won't be one of them. And you know, the beauty of markets is we all get to watch and see what happens.
I actually don't think government cryptocurrencies are at odds at all. I can't wait for government cryptocurrencies because I know what they're not going to be. They are not going to be decentralized, okay? We also have to talk about definitions. What is a blockchain? To me, it's very, very simple. It's very black and white. A blockchain is the invention of Satoshi Nakamoto, which is the proof of work, which is where you have this decentralized global structure. Decentralization is one of the slowest, most grossly inefficient technological ways to do absolutely anything. It's horrible. There's only one use case of decentralization that worked before Bitcoin, and that was BitTorrent with file sharing. And it's very inconvenient, extremely annoying. You have to almost use Tor to use it, which is incredibly slow. Tor is another example of almost like decentralized internet. I hate using Tor. It's slow as hell. Bitcoin is grossly inefficient. You're right. It is slow, and it is expensive, and it's horrible. But it's the only way to achieve decentralization. Anyone that tells you that they can do better, they can't. They have a centralized way of doing something. Okay? So that is what Bitcoin is there for. Everything else is just centralized means. So the greatest thing that the governments can ever do for Bitcoin is to remove cash from circulation and bring on their digital currencies, because they're not going to be decentralized, and they're only going to create more use cases for Bitcoin to replace that cash. Same thing goes for any of these altcoins. They're not actually competing with Bitcoin. It's pretty much an illusion. And going back to the Ethereum case, the Ethereum blockchain, I mean, if you think that Ethereum is sustainable, go and try and download the Ethereum blockchain. You will not be able to do it. The amount of data that the Ethereum blockchain is taking on is growing faster than your ability to download that data globally. So no one going into the future will be able to download the whole thing when I have every Bitcoin transaction in my $300 computer that I bought on Amazon 2 years ago because it's 6 years old. I have every single Bitcoin transaction. I can validate it. I can prove that the Bitcoin history is legit. That's actually impossible to do with Ethereum at this point. And that's why I don't understand how anyone thinks that that technology is going to be sustainable in the near future.
I fully agree with you, and you're absolutely right. Bitcoin is by far the original. It is the only way, like the only decentralized, fully decentralized way to transact, to store value, whatever you want to call it. But we shouldn't forget that there have been instances in the past of inferior technology that have been adopted by the masses, and the masses might not care about the core kind of philosophy and what Bitcoin stands for. Unfortunately, and I say unfortunately, the masses might adopt more centralized solutions, such as government-issued cryptocurrencies, and those completely miss the point of what a Bitcoin stands for. But your average Joe on the street will probably not care if that's a fully decentralized, completely secure Bitcoin, or he's just paying with another platform or a government-issued cryptocurrency. So there will be a use case, and the use case for Bitcoin will evolve and will expand for people who understand it and people who value the things that it stands for. And I think we all do that. But if you go really mass market, I don't necessarily see that 95% of people would care about it. So you might have other platforms that far overtake Bitcoin, but that doesn't mean that the actual value proposition of it goes away.
So obviously Bitcoin will be the legacy of blockchain forever. That's where it started. But I think it was a good point where you talk about the internet burst in 2000. And we've seen some company like Amazon was before the burst, some others were after, like Google. I think that the exponential growth in technology now coming with artificial intelligence and new tech coming, I think it's really difficult, honestly, to know where it's going to go. And I think we're going to see new tech in the blockchain, and things are going to be even more evolutive on this. So this is where I think we should not put everything on the Bitcoin.
Yeah, there's a lot of interesting things we dove through right there. And I think a good question to go to in that regard in talking about the evolution of not only just altcoins, but I mean, we can even toss Bitcoin in the picture, generally where cryptocurrencies are going to head and should we expect a change in leadership. I have really two interests in cryptocurrencies, and I think this is what blockchains and other methods of decentralization can do. And this is a peer-to-peer digital cash, which is what Bitcoin was originally intended as in the white paper. And then you have the second factor, which is protocols, platforms for enterprise to build applications, whether those be small applications or large-scale enterprise solutions for Fortune 500 companies. First and foremost, with a peer-to-peer digital cash, Bitcoin, as well as practically every other currency out there, has their benefits and their negatives. Bitcoin itself, much like other currencies, run into the biggest issue of all, which is scalability. And they're relying on second-layer solutions or increasing the block size, which, as many people have said, might lead towards centralization or people not being able to run a fully validated node. So scalability is a big issue. It's going to knock out, I think, 95% of currencies. But then what do you have to look for after that in a peer-to-peer digital cash? Well, a lot of people would argue that to have a truly free peer-to-peer digital cash, if you're going to make it decentralized, why not make it private? Why not have privacy built in? And what method of privacy do you want in that coin? And I don't think there's any perfect system, but you need privacy, you need scalability, you need zero transaction fees. There's only a few cryptocurrencies that can do that, and I can tell you they're not using blockchains, they're using DAGs, directed acyclic graphs. So you can look at projects like IOTA, you can look at projects like Nano, where you can literally send a transaction, pay no fees, and it's instantaneous. Bitcoin itself aimed to be that, but it's obviously more towards what Tone said, which is it's an immutable ledger. You can go back to 2009, and we can see that Bitcoin transactions are still secure. It's very hard to corrupt the network. You need to pull a 51% attack. So the safety is there with blockchain technology. The scalability is not unless we use layer 2 solutions or continue to scale the blocks, which again, some people have worries about. So again, there's a lot of debates going on in regards to a peer-to-peer digital cash. But in the case of enterprise solutions, you have to take a look at a lot of these multi-billion-dollar cryptocurrencies in the altcoin space, and you need to ask a few things. Do they have the language support that companies are going to need to build enterprise solutions? Is there enough scalability to where you can process tens of thousands, if not hundreds of thousands, if not millions to hundreds of millions of transactions? Now, why would you need that? Well, if we take a look outside of Visa and MasterCard, which are used as a comparison for peer-to-peer digital cash, think about all the digital transactions of information that go through corporate enterprise solutions in the background that we don't see. It's probably hundreds of thousands, if not millions, within any given minute. And no enterprise solution right now can scale to that. So I'm very concerned about that. I don't think we're going to see base blockchain technology take off for every single technical application. More secure-based, immutable transactions. But for everyday transactions, we're going to have to use something that's different, whether that is a DAG, as we've been talking about with some of the peer-to-peer solutions that are coming out comparative to blockchain. I don't know if it's going to be that, but we're going to have to find other methodologies. And not everything's going to be on the blockchain. As everyone was stating earlier, I think it's very important to state that we're here today and we're seeing the movement of cryptocurrencies and decentralization come up. But there is a lot of people in this world who, and I bet if I were to do a poll in the audience, I think it would be good to do, who here would not trust holding their own money? Who here would, if you raise your hand, if you wouldn't trust holding your own money? Okay, so we got some confidence here. That's good. But I know there's many people out there who wouldn't trust not having their money in a bank. They would not trust holding their own money because they see the hacks with cryptocurrencies. They see there's sometimes flaws with security or managing their own money. So again, I think you're going to have a hybrid in the world. I think you're going to have a mixture of decentralized economies, decentralized peer-to-peer cash, and you're also going to have the same old infrastructure in some regard. So it'll be a hybrid system. We'll get to choose what we want, and I think that's beautiful because we have the freedom of choice to choose what kind of life we want to live. Oh, yeah, that's true. I guess we're probably running a little bit short on time. So let's go ahead. We'll jump into the audience. Do you guys have any questions?
Hi, thanks for the lively discussion, everyone. So since the name of the session is about altcoins, I'm just curious to understand from the panel, is there a certain class of projects or coins that you feel bullish on for 2018? For example, privacy coins like Nicholas mentioned just now, or decentralized exchange tokens, which personally I'm bullish on. So I just want to get your thoughts on what classes of projects or coins you think have a good future for this year. Thanks.
Well, I mean, I don't know if I would pick certain coins, but I think adding to what Nicholas said, I think some of the elements in the Bitcoin blockchain that have come out that are also interesting is the nature of community and using coins to create community and reward community members. The transfer of ownership of the data that Google and Facebook make money on to the community members is something very powerful. And anonymity, right? All of the idea that you could carry with you on a blockchain all of your medical information that an EMT or a doctor would be able to see immediately. I find all of those applications quite powerful.
I'm going to go the other way. I personally do not see any value in any token except Bitcoin. But even if there are going to be survivors, I mean, I'll play my own devil's advocate. Even if there are going to be some survivors, nobody is able to know what they will be. Absolutely no one, right? So if 99% of all of these tokens are going to zero, which I believe all of them are, but let's say not 100% go to zero, but 99%, there's thousands of tokens, right? So unless you equally invest in all of them, you will not be able to pick the winner. And if you equally invest in all of them, when the winner comes out, you will realize you have lost more money than you have gained. Okay, this is pretty much how the VC space works. This is why I think crowdfunding is almost ridiculous, because those investors will end up losing more money than they will gain because they have absolutely no ability to pick out winners, and they have absolutely zero resources to hold the companies accountable for their investment. Okay, unlike VCs that have money, they have lawyers, they have resources. Which is why companies are trying to go to the masses, because the masses have no ability to hold them accountable. Same thing goes on with these tokens as well. So that's pretty much how I see the space, and I hope Bitcoin survives because that's where all my value is. And if it doesn't, it doesn't. I have other skill sets. But if Bitcoin doesn't survive, then I don't see how it works. To comment on the medical records, I think putting medical records on the blockchain is completely ridiculous. To me, a blockchain puts you in charge of your own data. I have all my value in Bitcoin, and I have the ability to permanently delete all of my money by accident. So unless you want to have the ability to permanently delete all of your medical records, the last place you want them to be is on a blockchain, because a blockchain gives you that. You're the only one in control, and you're in control to lose it. Same thing with real estate. The only reason to have real estate on a blockchain is if you want the ability to accidentally send that real estate to your neighbor, and now he owns that real estate. That's a blockchain. That's what it does. Those that realize how powerful that application is will survive in this space. And it only applies to a very, very small niche of the global population.
I think what you're referring to is like a specific use case. You can also have other use cases where it just becomes easier to transact like digital assets, basically. But yeah, it's a good question. I don't know. I think privacy will probably become more important, yes, of course, as governments wisen up onto how to track public blockchains and tie personal identities to it. So probably yes, but I'm quite interested in once we move like the traditional finance world into tokenization. So once you have kind of tokens that are allowed finally to have some equity-like components, I think that will set up a major kind of new wave of this whole industry. Because for now, that's really, really difficult. There's only a few tokens that actually kind of represent equity, if you like. Once that new wave kicks in, I think that will be a big new push.
I think I talked about it yesterday. I think it's all about mega trends on what's going to make the blockchain better. So that's what I would look at: speed, security, interoperability. All those aspects are really important. I think it was a really good example you talk about real estate. And I think there's a bit of confusion with what we call the blockchain and what is another trend, was tokenization of anything. Okay? And for me, it's two different things who are not related. And people are putting everything in the same bag today. Tokenization was good. I really like tokenization. But you can tokenize and being centralized. And I think in the case of real estate, it's a good case where you want to tokenize real estate assets. It's going to be more efficient in the financial systems. But you still want to centralize this, because I agree, because you don't want to lose your apartment. You send it to your neighbor. So it's different function on what blockchain is doing and tokenization is doing. So
another way I explain it to some people is everyone has their own definition of a blockchain, right? So it's a giant spectrum. To someone like me, a blockchain is proof of work mining that gives you censorship-resistant, decentralized control of your data that you have the ability to permanently delete. On the other side of the spectrum is a Google spreadsheet, is an Excel spreadsheet posted as a Google document, and then you assign multiple admins to that Google spreadsheet. Now, to the majority of the people, that is a blockchain. Okay, so you really have to figure out where on the spectrum you are, and the closer you are to an Excel spreadsheet as a Google Doc, the less you are a blockchain to me. It's just a database. The closer you get to full immutability of Bitcoin, that's the blockchain. So where are you on the spectrum between a Google document and Bitcoin?
I'll answer on it real quick. I think that's very important. It depends on the application of what you're looking for in regards to cryptocurrencies, because like Tone was saying, if you go all the way to Bitcoin, Bitcoin right now, I think many people would agree, is the most secure network on the world. It's a very fascinating concept, and it's not because Bitcoin is just solely on a blockchain that plays a role in the security, but the blockchain itself that Bitcoin's based off of would not be as highly secure and immutable, meaning it can't be tampered with by bad actors or people in the sense of game theory, because of the proof of work, the immense amount of computational power that goes into it. It seems inefficient, but for that immutability aspect, it's what protects it to a degree. So anyways, going more towards the original question, was it a question of what applications could we see in altcoins?
What classes of projects do you guys feel bullish on?
What classes? Okay. Yeah, I'm very kind of narrow-minded in this sense. I've not only, not to be rude, I've walked around some of the events here in the crypto space, and I get, as a YouTuber in the space, I get tons of ICOs reaching out to me saying, oh, we're going to do this on the blockchain, or we're going to decentralize this industry. And like many people on the panel have said, there's some industries that aren't going to, they don't desire a sense of trustlessness. Consumers won't care about it. They're not practical on blockchains. They're not scalable on blockchains. So that niche is going to be the amount of industries that will benefit. But there are some really serious, awesome industries in the space right now, outside of just a digital peer-to-peer cash, which I think will eventually be created on some sort of decentralized technology, whether it's blockchain or something else like a DAG. But for me personally, outside of peer-to-peer digital cash, I think the best market you can look for in the altcoin space is to see where most ICOs and other crypto projects have been successful, and that is protocols, platforms where people can build applications on top, because you don't need a blockchain for every other thing. That's kind of the approach that some utility tokens take. And because of that, I think what we need more than anything is platforms that meet every standard that's going to be necessary for someone who doesn't want to go out and build their own blockchain. And that's so they can build decentralized applications, so they can build use cases for smart contracts. Some of the industries that could benefit from this that I'm at least keeping an eye on, I believe that in a sense cloud storage benefits some from a blockchain. The reason for that is not so much the encryption side in regards to cryptography, but the biggest thing that actually benefits cloud storage in the case of a distributed ledger is you have more competition in the sense of, for example, Simoleon, which is a decentralized cloud storage platform. There's the costs go down because of the immense amount of competition and people pooling in to store the different amount of information that's coming on. But the biggest factor is that in these chains, they're just not only decentralized, they're distributed, meaning that information can be broken up into pieces and distributed amongst all of us if we're hosting as nodes on the network to download the ledger of information. So let's say, for example, I hack into one of the computers here today that has a little bit of that information that's being stored on there. If it's your personal information, I'm not going to know anything about it because it's so broken up. So because of that, I think cloud storage has a future, and along with that as well, maybe something like web hosting, a few other technical applications. But again, there's a huge debate going on. I think there's a lot in the sense, I would say the mass majority of industries out there have no chance on the blockchain, and it's just irrelevant to put it on there.
So just building on that question, mine is more directed to those who either manage assets or manage indices. How do you think about portfolio construction? You know, what do you think about from a fundamental perspective, and you know, how do you identify your universe for the index? Given that there's 1,500 names to start off with, how do you narrow that down? So more so for, I guess, Daniel and Raphael.
Portfolio construction.
Portfolio construction.
You know, my view would be very different than Tony's. You know, the portfolio that we have actually does 20% better than Bitcoin and has a 7% position in Bitcoin. We wouldn't have a position more than 15%. We're very concerned about correlation and concentration because, again, if you have other people's money, you cannot take, I don't think you can take the risk of losing all that money because one asset has a problem. And let's not forget, we haven't talked about it, but Bitcoin has one major minus, and that is any government or regulator decides that it wants to shoot at the altcoin space is going to shoot at Bitcoin first. And that, to me, is a risk that's very hard to quantify, but you know, leaving aside the risk of hacks and all that stuff, they're going to have huge regulatory risks because they are the biggest and the best known. The other thing that we do in our portfolio is we break it into 3 buckets. So we have the most liquid coins, which is about 40% of the portfolio. Then we have what we call use cases, where we think that there is the combination of a good team, an interesting industry, a nice token economy that allows us to believe in it. And then that's another 40%. And then we have about 20% into more speculative, either cryptocurrencies or use cases.
So for us to start, we wanted to have a really a market capitalization weighted approach to understand where the money was going and how it was moving. And it's true that when we're talking with a lot of people in the industry, if I would say, do you know if the top 5 are performing better than the top 20 or the 30 in the middle are doing this? At the end, even the biggest blockchain expert didn't have no idea. So we said we need to map basically where the money is going and where all those pieces of cryptos are moving against each other. So as simple as this, we were thinking about this. And then at the second stage, we're looking at some specific indices. And I think it's more protocol related on what is infrastructure, what is security, so we can track some trends on what's the underlying. Because I think on any IC or cryptos, I'm always thinking people are looking and say, oh yeah, well, what do you think about this one? I'm like, I don't know. What are they doing? And I realize most of the time people have no idea what's in the white paper and what those guys are trying to solve. So some other indices are going to be more on the underlying. Yesterday, everybody were asking questions of like what people say on Twitter and how it's moving the market. I think the big question and what we're thinking about with indices, and that was my vision day one, is how you want to invest long term. You know, who wants to be the Warren Buffett of crypto? You know, who wants to say today I'm going to take the right bet, put some money in the right places, have a beta or smart beta approach, passive investments, and wait, and my wealth is going to grow. Or you can do day trading, but to be honest, I think everybody's still learning. I mean, you're trading every day, how it's moving. Volatility is crazy, and we don't really understand what are the fundamentals and the rationals that really move the market right now.
Just one comment, like what's something that's really interesting to watch is the correlations between these things. So early last year, it didn't make any sense, but if Bitcoin went up, all the other projects their price went up in Bitcoin. So there was kind of a lever of like their prices went up twice the amount that Bitcoin went up, even though they have nothing to do with Bitcoin. So that has corrected a little bit. I think you see now if Bitcoin goes up, at least the prices in Bitcoin will stay stable or will go down a little bit, so the price in US dollar remains the same. But the correlations are very interesting. Everything is highly, highly correlated still, which I think is a sign of immaturity of the market. And yeah, I would assume over the next year or so, those correlations start to diverge a little bit, and then these assets start trading based on their actual underlying value.
I go the opposite way on this. My recommended portfolio construction would be like 80–90% stock market, more heavy on the US stock market. And you can diversify that with a zero correlated asset to the stock market, which is Bitcoin. You can also add a little bit of gold, though I don't see any use case for gold now that Bitcoin exists, assuming Bitcoin is going to stay with us, because Bitcoin removed the greatest property of gold, which is, when shit hits the fan, you convert your money into gold and get the hell out of your country, which has become very difficult to do in the world of metal detectors. So that property has disappeared. So now Bitcoin is replacing that by taking your hard-earned money, hiding it in your head, and getting on an airplane. So that's why Bitcoin is a nice uncorrelated asset to the stock market. I don't believe in investing in bonds because the governments don't actually make anything. They just spend other people's money. So bonds is not a good idea. But we have leaders, Google, Facebook, and I don't see it as like, oh, Facebook is bad, Google is bad, they're profiting on all of us. You can participate in those profits, just buy their stocks. No one stops you from buying Facebook at the IPO, even though it was overpriced and it fell 50%. No one was stopping you from buying it 3 months later at a nice 50% discount at $20. Facebook came close to 200. And when it comes to, oh, you should have invested in Facebook, only the rich people got to invest in the pre-IPO of Facebook. Well, yeah, because Facebook had like 100 competitors, including MySpace and Friendster, that were way ahead. There is no way the little guy would have had a chance to know which one was going to win, and he was probably going to lose by betting on MySpace and Facebook. Sorry, MySpace and Friendster. So that's kind of my view on it. And as far as your portfolio construction is concerned, and just to quickly comment on decentralized storage, I don't understand how that's a viable business model. There is absolutely no need for decentralized storage. What you need is protected encrypted storage. My email is protected encrypted storage. I encrypt my own email, and then I store them on a server, all encrypted, right? So like, no one knows the password but me. That also means that if I lose my password, I just lost all of my email. That is what's needed from storage. Decentralizing storage, why the hell would I want somebody else's data on my computer? I would be totally liable for that data, whether it's encrypted or not. If some FBI agent decides to encrypt, some of the worst files possible and even broken up into pieces, and he knows exactly that encrypted file ended up on my computer, I would now be liable for that piece of data. So the only use case for decrypted storage is literally some of the worst data somebody wants to store, and they want to move that liability onto another person. That's what it would be used for. Now, we can have a nice discussion whether the world needs that or not, but I'm just explaining how it's going to work. I just don't see it. So coins like SIA, I don't understand how they're going to succeed in the long run. They just won't.
I guess to wrap up on the question you were talking about in regards to, I guess, kind of securities markets going on in regards to making ETFs and different baskets of investments in regards to cryptocurrencies, I would say that more than anything, it's going to depend on excessive diversification at the start. And over time, I think we see that new ETFs come into creation, different ways to basket investments in regards to this market, because you're not usually going to be picking one coin, because that's a central point of failure. I think that at the start, we're going to start with Bitcoin ETFs, Bitcoin futures, and then from there, you're going to see pools of investments into different sectors. So peer-to-peer digital cash solutions. You're going to see different baskets of protocols, so Ethereum, Icon, Neo, et cetera. And what's going to happen over time is, just like social media and other innovations, you have a kind of solidifying of competition. So it starts off with 100 competitors, then it goes to 50, then it goes to 20 and 10. And I think that ETFs over time are going to do the exact same thing. I think they evolve over time. You have obviously wide range things such as the NASDAQ, and you can hold ETFs for that index. But you can get more specific over time. You can get towards ETFs for different protocol platforms that offer different features of scalability, different features of privacy, different uses of languages and smart contracts. And we're going to see a huge basket of it. I honestly think none of us know what it's going to look like, but you're going to have both specific options, and you're going to have what I think an average investor wants, which is a massive basket of different assets, sometimes holding 0.5% or 1% of some type of platform. And with 1,500 coins and that number's continuing to grow, you're going to see it's going to get more and more diversified. But it's going to be a question, like Tone said as well. Are you going to be too diversified to where the 1 or 2% of projects that succeed are not going to make up for your 98% of losses? So I think you need to have a lot of fundamental research.
That's exactly what happened in the NASDAQ. It took 15 years to recover. 15 years. The NASDAQ topped, and it took 15 years for it to break another high. That's not counting for actual dollar inflation. So probably longer than that. One other quick comment. Bitcoin has no regulatory risk. This is the point of decentralization. Every other token has regulatory risk independently. Now, will all of them face the same risk? We don't know, right? Like China just banned all ICOs. They took a look at 60 ICOs. They said these are all Ponzi schemes. All ICOs are banned. You can stand and scream, but my ICO is legit, but the 100 ICOs around you aren't. So you're going to get caught in the net. It's going to be like the default position. Well, you know, how do we know that you have the legit one? We don't have the resources to look into all of them. Okay, but Bitcoin is unregulatable. That's why it's worth so much money. Meanwhile, every single other project pretty much is regulatable because they have leaders, they have people, they have people that are in charge, people that need to promote that project and the coin. And that's another reason of what separates Bitcoin from all of these other projects.
Just to be clear, I think it's pretty easy if any government says, if you spend a Bitcoin, we're putting you in jail. That's pretty effective regulation.
That's almost how file sharing works, right? I mean, like every time I download a file, I face a $5,000 fine from IASP. And I still haven't gotten one. And I can't remember the last time I paid for a piece of content. It was probably 1998.
Okay, on that note, we're a little bit over time. So I do want to say thank you all not only for coming, asking really good questions, but I think, again, this is a really, really interesting topic. And it's good to get both critical points of view, but also passionate points of view in regards to where we could see this market going. You know, again, we got a lot of different viewpoints, a lot of different ways this could turn out, but it definitely is an exciting space, and I'm glad we could get some good questions from the audience and hear a lot of different points of view. So I want to thank you guys, and thank you all for coming as well. Thank you.